What's up, guys, and welcome one more time here to Crypto B, surviving in the crypto bear markets. In this video, I'm gonna tell you some ways that you should be doing in order not to fall in traps or just end up losing all your money by taking unnecessary risks. But before that, of course, smash the like button and subscribe to the channel. It's very important for me because more than 78% of the people who are coming back to the channel to watch the content, they forget to subscribe. So now it's your turn to help me. Like this, the YouTube understands that you like the content and it will help me to push my content forward to other people to watch as well. And I can achieve my 4,000 hours watch in order to start monetize the channel. At the moment, I don't have super chats. I don't have yet a monetization on the videos. So if you'd like to support the channel, as everything I get here, I reinvest in order to make better quality content for you. On the description, there is some crypto address that you can support the channel with whatever you like. Well, I found a very interesting article on some ways that you can survive or go through the bear markets in order not to take so much risk. And like this, of course, don't lose money and be ready for when the next bull markets come. Because one thing we can be sure, the bull will come back. And when it comes back, maybe it's a great opportunity for you to make some exponentially gains. So, 7 ways to survive a crypto bear market. First, stay calm, access your options. Whether you see the bear market as an opportunity to buy the dip or finding falling crypto price a bit too stressful to handle, always try to keep yourself calm and assess the situation objectively. Emotional decisions are the ones that you will mostly likely regret down the road, especially if you are trading. First, start by asking yourself why you are invested in crypto in the first place. Do you believe in crypto long-term success and want to tap in on the many opportunities that it could bring along? Or are you just here to earn some quick bucks doing short-term trading? Well, the answer to this question could be your stepping stone to figure a way out of the bear market unscratched. This is definitely some question that you should be asking yourself. Why are you here for? Why are you trading? Why you invest in crypto? Why are you long-term holder? What's your plan for the future within crypto? Are you a crypto tourist? Are you just come here for a little while trying to make some money out of it? Or you're a believer, you believe that crypto will be here for forever. That's it. The next probably on the next 10 years, crypto will be taking over the world. So if you're a long-term investor, maybe you should reconsider the way you invest, because millionaires and wealth you can make on the bear market. If you know, if you study, if you invest in yourself first in order to make some great gains when bull markets start to go back up. Don't try to time the bottom, right? Nobody, absolutely nobody can sharp predict the bottom. You could study technical and fundamental analysis all you want or listen to experts, but at the end of the day, you may still have to rely on your gut feelings while trying to time the bottom. And as you will probably agree, gut feelings are not much of an option if you are looking for strategies to navigate any crypto bear market, or worse even, a crypto winter. You may buy at what appears to be the bottom at a given time. However, the price could further drop, and if it does drop, you will have to sell it again to have your next shot at timing the illusion of a bottom. More often than not, this strategy will only cause your wallet to shrink and losing your money. So what to do? Third, dollar cost average. DCA. If you've been following me here on the channel, I've been speaking about this a lot, about DCA, dollar cost average, or DCA. It's an arguably the best strategy that it's proven to have worked exceedingly well even during the toughest of bear markets. It's simple but long-term strategy where you continue to buy small amounts of assets over a period of time regardless of the price. For example, a DCA schedule will have you investing, say, $50 on Bitcoins every week rather than investing 200 at once. You may make changes to your DCA schedule from time to time to meet your changing and requirements. Dollar cost average $50 a week for 3 years total investment versus current portfolio value. So continue from the example above here. See, it starts here and goes slowly going up on investment. So continuing from the example above, suppose you started buying $50 worth of Bitcoins every week 3 years ago. By now, you would have invested $7,850 in Bitcoins. Over these 3 years, now, using a DCA calculator, you will find that the total value of your investment would currently stand at $21,777. That's sizable gains of 177.42% chain over 3 years. Also, you should consider staking when the going gets tough in the crypto bear market and your portfolio starts shedding value left and right. Staking comes off a good way to earn passive income from your crypto stash. Staking basically refers to the practice of locking away your coins on a proof of stake blockchain for a period of time and being rewarded for it. The best part about staking is that increase the size of your wallet even in a bear market. That way, when the bull resumes, you start with more than you had previously. Besides, staking also lowers the possibility of panic selling because your fund is securely locked on a blockchain. Avoiding shorting in a crypto bear market. Shorting is a technique trader used to profit and falling crypto price. That should ideally make it excellent fit in a bear market when prices drops are a common occurrence. However, you would find most experts advise against shorting Bitcoins and other cryptocurrencies because it could potentially lead to unlimited losses or liquidation of your positions. This is a fundamental problem with shorting, and no amount of experience can prepare you for the rude shock when things go bad. When you buy a crypto, go long. You can never really lose more than the amount you have invested. For example, say you have purchased a Bitcoin worth $100. So the maximum you could lose from the investment is $100. On the other hand, the potential gains, at least on paper, could be limitless. Think of the scenario where the Bitcoin price increased so much that the 100 investment returns 500 or 1,000 or even $10,000 and so on. It's just the opposite with shorting. If you short a coin at $100, the maximum you will earn from that trading is $100. However, if the price of the crypto starts increasing and the uptrend continues, your loss could pile up indefinitely. And if you short using margin, you will have to keep paying the interest charge on top of the original loss for as long as you choose to keep position open. So avoiding shorting in a crypto bear market or avoiding shorting regardless. Carefully assess the current state of the market. Well, the point here is that it's important to stay up to date and have situational awareness about the current state of the market. This way, you stand the best chance to position yourself accordingly, act quickly, minimizing your losses. Okay, avoiding leaving your crypto on exchange, and this is very important. Like they say, not your key, not your coins. This is applicable in pretty much as any scenario involving a centralized custodial crypto exchange. However, the risk of irretrievably losing your funds stored in this exchange becomes even bigger during a turbulent bear market. Consider that might happen if there was a sudden market crash. Billions of dollars would be wiped out of the markets, causing many exchanges to end up insolvent. Always opt for a non-custodial wallet app, or better still, a tried and tested hardware wallet to have full control over your crypto stash. Crypto winter are not the end. Have no doubts in mind that as an investor or trader, you're bound to lose money occasionally. 100% strikes rate, it's practically impossible, no matter how seasoned you are in the game. However, by following the strategy discussed above, you will significantly reduce your chance of falling prey to crypto bear. Alongside, make sure to stick to other basics such as always using stop losses in case you are trading. So basically some ways of surviving in the bear market. Well, according to Shipalama on the Be in Crypto website, it may sound a little harsh to generalize along those lines, but as the saying goes, even a fool can make money in the bull market. The proof of how good a trader you are lies in how good you are navigating in the bear market. These generally agreeable rules of thumb is applicable across all markets, not just crypto. However, with the kind of volatility crypto usually undergoes, the risk and difficulties brought along by a crypto bear market tend to be a much higher scale. And as we witness the possible onset of another crypto winter, with most of the popular coins knees deep in the red, it's time we optimize our trading investment strategies with the following tried and tested ways to survive in a crypto market. All right, but before that, what is a bear market that so many people speak about? For those out of the loop, a bear market can be best defined as a prolonged drop in assets price, which then cause your portfolio to shed value. In a bear market, the supply of an asset is typically higher than the demand because a large chunk of investors, known as bears, starts offloading loss-making assets from their portfolio, fearing further price drops. Bulls versus bear. A bull market is when the price of an asset or asset class is on the rise over a prolonged period, which then results in a spike in your portfolio valuation. Bull market starts when investors feel confident that the price will increase and then uptrend will continue over a prolonged period. In anticipation, they start buying and holding the assets that they believe will benefit the most from the bull market. In other words, a lot of investors are willing to buy during a bull market, while few are willing to sell. Thus, the demand becomes higher than the supply and the price starts to increase. This way, investors' predictions about bullish market condition turns into a self-fulfilling prophecy. In contrast, bear markets, where we are now, begins when investors are low on confidence and start believing that the price will continue to fall. A few facts to note here to better highlight the bull versus bear market dynamic. While some investors can be bearish, the vast majority of investors are generally fundamentally bullish. Most asset class, including digital assets, typically post positive return on investment or ROI in the long run. Bear markets are usually short-lived compared to bull markets. Between the two, a bear market is more difficult to invest in and navigate because assets repeatedly shed value and price tend to become much more volatile. Investors' psychology and risk aversion plays a big role in whether a market is bullish or bearish. However, that's not the only factor. Supply and demand, socioeconomic stability, and as well as activities in the broader financial market also plays a key role in making the market sway one way or the other. What is the crypto winter? The most dreaded season in crypto's short history so far. Crypto winter refers to a prolonged bearish period during which prices of most digital assets continues to dip over several months. The price drop in a crypto winter tends to be very steep. For example, During the last crypto winter that took place between early 2018 and middle 2020, although estimates varies, Bitcoin shed almost 88% of its value as compared to its then all-time high price. The ICY chills of the last crypto winter was felt by the broader cryptocurrency markets as well. In fact, many popular coins saw up to 9 to 95% price drops compared to their all-time highs. So, the best strategy to overcome a Bitcoin bear market. Being the most popular coin by market cap, Bitcoin is kind of a trendsetter in the crypto market. So, if a crypto bear market is looming on the horizon, the first signs of it are almost always visible in Bitcoin's price movements. Other cryptocurrencies just rally behind it, so far at least. And these observations hold even during subsequently cycle when the markets recover and eventually start a new bull run. As of this writing, Bitcoin has been in the red for several weeks in a row. The alpha crypto has shed nearly a quarter of its value month on month. And as always, almost all the major coins, including likes of Ethereum, Cardano, and others, have fallen too. So, yes, it would make sense to say that we are currently facing a bear market, okay? However, based on the data from previous bear market, it's safe to say that Bitcoins always bounce back. So, vast majority of experts and industry insiders are of the view that the best way to survive a Bitcoin bear market is to hold it and patiently wait out the storm. Having a long-term outlook is essential as opposed to give in the urge to panic selling. Furthermore, try to avoid trading when the market is in bearish phase, especially if you have little to no prior exposure to trading. Apart from that, how long does a bear market last? A lot of people ask this question. There is no set time. A bear market can last anywhere between a few weeks to over a year and beyond. So we always need to be aware in how the bear markets are behaving. You need to be within the community. You need to be within the space. You need to understand what's going on. So my biggest advice to anybody here is invest in yourself, invest in knowledge, understanding which projects you would like to invest. If it's a good time to go in, you must always do the best of your research in order to see where to put your hard-earned money. And like this, be prepared to accumulate more tokens that you like, and like this, on the next bull market, be able to get some exponentially gains. If you like this video here, there's plenty of video here on the channel that I'm 100% sure that you love it, about crypto and about many different projects. So keep watching, and I'll see you guys on another video.